One of my favorite guests, Samir Arora. He joins us now.
Hello, how are you?
Long time, sir, long time. Haven't met you after the chat.
Correct. Because I now want to beat that benchmark, so can't do it from sitting in Singapore.
Next time, sir, it will be vada pav. Let me tell you,
Or next
vada
time you
pav.
go to Singapore maybe and he takes you out.
सिंगापुर में तो चाट नहीं मिलेगा.
मिल जाएगा.
It's been a good year, Samir. Despite whatever odds we've had, global geopolitical concerns, fear of inflation, net outflows, fall in China, Indian markets have done rather well. Is the party here to stay?
Well, this year we have done relatively well, but we would like to do absolutely well, which I think will start maybe after budget, you could say. Not because budget is good or bad, but what I mean is just it takes 2-3 months for this US thing to settle down. I heard your thing saying that the minutes of the Federal Reserve, this thing showed that they are now going to slow down, but this was known. Actually, this was known in the last after the press conference that basically from now on, they said it themselves. It's not that anybody had to interpret that the slope of the rise will be less, which means instead of having 75 basis points, they might do 50 and then 25. But the end number will be around 5% to 5.25%. That is not low by any standards, particularly if we are used to whatever we have had for many years. So, but one way or the other, the US market will settle down in the next 1-2 months. And by that time, we would be ready for post-budget, this thing more rather than pre-budget, because pre-budget, they throw these balloons that, oh, we might change capital gains to 3 years and all that, which, on the margin is negative, whatever we say. But otherwise, I think India will India will perform in absolute in 2023, I think for sure. Just to tell you one more number, in the last 26 years that I have been managing Indian money, only for one 2-year period has the market been negative in 2 consecutive years, which was 2000 and 2001. And there you could say that 2001 also might have been positive if September 11 had not happened. So otherwise, at least in my 26 years, I have not seen 2 negative years. Although you could say this year is not negative, it's more like zero in rupee terms.
Samir, but ultimately markets will follow earnings. And if I look at the sum total of the earnings for the quarter gone by, and I'm keeping banks out, that's in base effect there, the aggregate earnings are down and brokerages have slashed their price target.
Correct.
So what happens to the scenario then?
So the way I wrote it to my investors is we'll keep commodities out and then it's up. Because everybody has to spin it their own way. But why should you take out banks? What you should take out is commodities. Because if commodity stock prices, profits fall, in a big picture sense, it means that commodity prices are lower. And in a separate sense, we know that commodity prices being lower, at the end of the day, we like it as a not, of course, I like it personally as a fund manager, but even the Indian economy and market in the end likes it if commodity prices are in check. So what you are saying is right, but I presented that we had X commodity, something like 30% growth in earnings this quarter over 1 year ago.
So when you wrote to your clients that the right way of looking at India is that take commodities out, what did they reply back?
No, they don't reply. They just beyond a point once in a while somebody asks. And then we say anyway, we don't invest much in commodities or even 1%. So everybody's happy if it's the commodity guys who are doing badly.
But I don't think the guys who bought Bitcoin are too happy. And Samir, I read your tweet as well. Just wanted you to, get in a sense as to what your outlook is, because Kathy Wood in her forecast talking about Bitcoin at $1 million.
So the thing is, Bitcoin, you have to give credit to the old guys, not just me, all the old guys, mostly. For example, I never even asked anybody how to buy a Bitcoin, like what do you need to do. These private bank guys started saying that we can get you if you want in your private bank account, but I had never bought. By mistake, I bought, I also bought an exchange, the US exchange coin, but I lost some 30% in a few months and sold it off. Other than that, I didn't go anywhere near it. But Kathy Woods, the problem is that if you say there's going to be a million, then in theory that should be your number one holding in your fund. I mean, it may not be 100% of the fund, but because no other investment of hers, she's saying that it'll be up how many times? That is 60 times, right? It is some 16, 17,000 and it has to go to 1 million. So if you think that is really going to up 60x, then you should have that at least whatever maximum percentage you are allowed to have in your fund, and she doesn't have that.
Hypothetically, if you're doing the show again, Chai Chart Pe Charcha, and this time it is not Dinshaw Irani, it is Sameer Arora and Kathy Wood. So what is that first question you would like to ask Kathy Wood after this prediction?
By the way, you may know that Kathy Wood and I share something in common. We
I have
both
no
work
idea.
for Alliance Capital. She also was in Alliance Capital.
Okay, so now you know her. All the more reason to ask that question.
No, the thing is that, that is my secret of longevity as a fund manager, that you don't overdo anything. All these, if you see from the 90s to now it's television, so I can't give you names, but you see every 2-3 years there is a new hero. And then that fellow says, I only do this. And that time it is working, so he's followed, everybody likes, his funds are up, and then he disappears from the face of this earth by either being blown out, burnt out, fired, retired, but mostly because that sub-theme stops working. You couldn't see that somebody says, I only do mid cap, then one guy says, I only do small cap, then one guy says, I only do quality, then one guy says, I only do large cap, one guy says, I only do commodities. Basically, this market is bigger than what any one guy can come up with. So it is possible that over a cycle, everybody does well because everybody's turn will come. But if your nature or your customer base is such that you want ongoing this thing, you can't be that narrowly focused. So now she had it for 2020 and 21. Never again in her life will she have that kind of success, and the benchmark will always be that she made 70% and 80% in a year. And because you're so narrowly focused and its turn is over now, somebody else will come in.
Okay, so let's see who the new hero is going to be. Kathy Wood, of course, has bought more shares of Coinbase that has been talked about globally. Sameer, good morning. One question I want to ask you was, around Diwali time, you said for the first time in 26, 27 years, you don't own a single IT stock. Have things changed since Diwali as we head towards Christmas? And can it change?
It can change. The thing is that, as I said, for example, Infi and TCS are up, but they've still underperformed all the banks. Mostly they've underperformed the banks and financials at least. But my point is that, just a few days ago, few weeks ago, suddenly Meta and Google and others started saying, sorry, we wrongly took this year to be a growth year and we hired so many people, blah, blah, blah. A few days ago in ET, I think there was an interview with with the Infosys saying, long term is very good. We also know long term is very good. Right now, the guidance or whatever has to be for the next 6, 9, 12 months. It can't be that nearly every tech company in the US is reversing, not just slowing down. And we say it doesn't matter. So I think they will disappoint. First of all, there is no guidance in this quarter, so I'm not overly panicking. By March, we'll see what happens. But as I said, they can do well, but unlikely that they will outperform to pain me. And after 3-6 months, we can also be back. Right now, our view, actually, in that sense, our view has gone wrong this year on two accounts, not on tech, but before that, in a big picture sense, that even though we got, or at least I thought I got this thing that the US inflation is very high and that the Federal Reserve will be very strict, all that because of the initial comments, but it didn't change my market. The market didn't fall. But things connected to US fell. And I don't think even now the US, after its initial, this thing is going to have a big rally. Because if you look at the previous rallies in the US, they are accompanied by not just a stopping of interest rate hikes, but by a cut or by injection of liquidity, which is in response to a panic by the system or by Federal Reserve. This time it is clear that they will not start cutting rates till maybe last quarter of 23, if at all. So if we are going to be connected to the US, why should we actively go seek? The whole idea is India is doing well in theory, and the US is supposed to be under attack, and Europe is doing miserably. Why should we go and actively seek those things, saying that the stocks have corrected? So, for example, recently one broker wrote that you should buy IT because the premium of IT over the market, over Nifty or whatever, has become average. So I wanted to ask him when are things below average? They are below average when India is doing well and the world is doing relatively badly. That is what I would think is because it can't be that everything is average or above average. So all its life it was average. Sorry, last few years it was above average, now it's become average. So therefore buy. But what about below average? When does that happen? It happens in my mind in this situation, this kind of environment. But who knows? It's
Right.
okay.
So Helios Capital right now has no IT stock in its portfolio. Can maybe look at changing that in March. It's football season, World Cup season, Samir. So I'm going to try and use an analogy. If you're seeing the underdogs beat, considered to be gods in cricket, Argentina. Look what happened with Germany as well. Can I ask you which are the underdogs you are betting on right now in the stock market? We've seen even the PSU banks, for example, beat HDFC Bank recently. Which are your underdogs in your portfolio?
So, and by underdogs, you mean stocks that have not done well recently or not. So, the thing is, we consider many stocks as underdogs only because we buy many stocks relatively early in their life, or as we call it, early recognition of change, which could either be a new listing or an old company doing badly. But we still don't call them underdog in the sense that underdog would mean that nobody knows about them. It's a view that we have that we think that these things can go. For example, this month Campus Shoes is down 26%. I think it will be a big winner over the next 2-3 years because there's a new category. Now, for 1 month, you can call them underdog. Since listing, they have done very well and better than every other dog that you may have. So I don't think of it like that. My theory is that we buy 20-25 relatively smaller positions of 2-3% per name rather than 5-6%. And nearly every year, some 8-10 of them do well enough to change the portfolio by and beat the market by a few percent. That is all that is needed. And also by being strict about selecting these and not accepting any, at least ex ante, any issues, you also reduce the number of stocks that may fall on the other side of the index, which is that they are doing very badly. But beyond that, we say we have these 20 stocks. We don't know which ones will do well, but some of them will do well because that is how the markets are, that all the time, every day, every month, some 30% of the stocks are massively beating the market. You can see it. It's just the way an average is calculated, that some 30% of the stocks are much better than the index and some 30% are much worse than the index. You can see this year also that the market is zero, but you might have these banks up 30%, or you might have tech down 30%, or you might have ITC up 50%. So the index has two sides, and all you are trying is if you remove the bad, automatically your portfolio will shift to this side, and you will get a few more successes than just what the stats would show, which is 30% have to do well.
Yeah, so you're saying, Samir, that Campus is going to be a major winner despite the recent decline, but the likes of Vedant, Campus, etc., they all fall under the consumption basket. Are you not at all worried about inflationary pressures being a long-term drag?
Long term, I don't know, but right now, actually, consumer is not very strong. I agree with you. But consumer, the thing is that because in the consumer, first of all these guys have reached very small percent of the market in terms of the consumers. But if you look at the country as a whole, the consumption has not been strong. They have not been, not these guys, but in general, people have not been able to pass through all their hikes. And generally, we are still having this K-shaped kind of recovery where hotels are full and weddings are high profile and whatever lakhs are being spent. And on the other hand, people are not willing to pay 10 rupees more for something or 20 rupees more for a shoe. So the point is, it is the K type thing, but because most of these guys are sort of relatively new in their life, the bet is not about 3-6 months here or there. But broadly, I agree that the consumer has not been as strong as we would have thought across nearly every company. And only this year, if you see, actually the financials have driven the earnings. And IT, the thing is, earnings growth is supposed to be 8-10%. Now, ex ante, we don't like it. In the end, that might be a great number if these consumer guys continue to be weak. But we have to not play that immediately, because at least the companies that we own are not targeted at the whole 1 billion population or 1.3 billion, but at the sort of creamy 200 million type number. So hopefully they have more ability to handle even if inflation level is high. But right now, I agree with you. Consumer has not been as strong, not just in one of these two companies, but really in every company that we have seen at this time.
Yeah, just wanted to get in your views on that. And now we also hear that you're buying into Piramal Enterprises. Is that true? Why a beaten down NBFC, Sameer?
Oh, actually, unfortunate, you can call it, but we own it from 2 years ago. So we bought it in December 20, and last year was very good, and this year has been very bad. But we like it because, now we like it because it's been hit a lot, but we generally thought that, if you see Ajay Piramal's history in the previous round, the overall numbers over the last 30 years would have been something like 28-30% per annum. So these were very good numbers, and in pharma they were good, and in real estate, we didn't buy it initially in the 16 to 1920 period, but after all the hits were taken, after the rights issue, after the sale of pharma to Carlyle 20%, and after buying DHFL at a sort of a good price, we bought it. But let us say it on TV only that this year we are disappointed, but we are holding it.
Okay, so that's Piramal, which they've had in their portfolio for over 2 years. Sameer Arora, it's always great talking to you. Thanks so much for joining us live today from Singapore. You're back in office, so we're not seeing those colorful shirts, I guess, on ET Now till you're going to be joining us from there. We've been looking forward to those. Thanks a lot.